Good afternoon. In this one, we're going to learn about 1099-Rs, the retirement income, and how to either exclude or spread the retirement over 3 years. So in this case, we put in for the taxpayer they received a 1099-R, some retirement monies. They received $30,000. So we've got it all entered in the normal spot in Fusion like we would normally do. They had some federal withholding of $3,000. And then the code was an early premature distribution for no known reasons, okay? So we've talked to the client. They took it out because they got hit with COVID this past year. Maybe they were in quarantine. Maybe they themselves ended up getting COVID, whatever the case might be. It does need to be COVID related though. You're going to continue to scroll down into your screen here. And we're going to get into here. So it's if the distribution qualifies for any special treatments, specify them below. At this point, what we're going to do is go right here, exclude from income. So that way it's not reporting like it would normally report back to the 1040. We will report on 8606 Ross or the applicable 8915 form. We want the 8915 form. And in this particular case, it's 8915E. So we're going to click on this little tiny hyperlink, just like that. We're going to click on that it's a taxpayer. And this is where we now start putting stuff in. So the disaster is coronavirus. Okay, in this case, we know what it is. We have to know the date. Okay, it has to be sometime after March 1st because that's when it came into law. So I'm just going to put March 1st for now. The total distributions in 2020 for this client was $30,000. So we're going to go ahead and enter in there. Qualified disaster distributions made in 2020. This is where we're going to, in this case, the client has said, I'd like to spread it over 3 years. So that way, essentially 10,000 of it becomes taxable now. Next year, they'll take another hit of 10,000, and then year 3, they'll take another hit of 10,000. And you can put a lesser amount in. And that's all we need to do. We click save. We're back at our regular form. We're going to click save there and continue on with the tax return. If you're doing the spread over 3 years like this, it will automatically make the penalty, that early withdrawal penalty of 10% will disappear in a sense. They will not get tagged for that penalty anymore. If you have any questions, let us know. We'll be more than happy to help you out with that.